So here's the $1,000,000 question. People or traders always ask me, is it possible to trade from the higher base chart strictly? Yes, it is. It is a bit risky because of the fact is we're dealing with drawdown. You have to understand that if you have a small account size and maybe you are using a funded account with a prop firm, or you may have your own personal account with only a few $100s in it, or maybe, $1,000 minimum. You want to be very, very careful and maybe not trade, based strictly off of a higher base chart, and look for more of a means of confluence, which I talked about in the prior video and so many videos here in the channel about marking up a higher base chart or zone off the higher base chart first, meaning supply or demand, and then moving down, scaling down to a lower base chart. So I'm looking at my 120, say for example on the NASDAQ, marking up a higher base zone here, like this demand zone here. Then I'm going to go down to a 24 range chart and look for a zone within this higher base 120 range zone. So a 24R zone, demand zone, inside a 120 range demand zone. Okay, that gives us what I like to call multi-chart confluence. We get rejection off of the lower base 24 range zone. That's the zone inside of the 120 range zone. Then I'm going to look for opportunity to go long with the confirmation. All right. Today's video is to show you, is it possible to trade directly from, say, for example, the 120 range chart and look for, profits? Yes, you can. And you can do it consistently. But again, you must understand the biggest part of what I'm getting ready to say is there will be more than likely drawdown. Typically speaking, on a 120 range chart, that could be like 30 points or a little more in one candle. So you have to imagine that if the market comes back, that it could possibly come back, swing back 10, 15, 20 points before it decides to go in its direction. We all should know by now that once you're into a trade, the market does its thing, ebbs and flows, pushes up, pulls back, pushes up, pulls back. So you have to be able to weather that storm and feel confident that the market is going to move in a certain direction. If not, then get out the trade. So I want to show you here today, after 13 years of basically trading, and looking at these charts, how you can go about trading strictly from a higher base chart like the 120. But again, we're looking for high probability zones, okay, whether demand or supply, and then looking for where I'm going to show you using some tips and advice how to get into a trade strictly from the higher base chart. So let's say, for example, that we look at both like a demand and a supply, okay? All right, so let's say that this was, the market was, and first, before we get started, let me say this. Again, market structure. You have to be able to read and understand the market, the structure of the market. You want to be able to take trades and want to take trades based on what is going on your chart. If we're breaking structure to the upside and pulling back to a beautiful untapped, unmitigated, gapped demand zone, then we want to be seeing the structure, making higher highs and higher lows, pulling back to a key area of untested demand, and then looking for opportunity to go long. Okay, and same thing if we're like right here, we started moving to the downside, not chopping, but pushed lower, pull back, broke structure. Push lower, pull back, broke structure. So we are breaking structure lower. So my bias switches, or I start to think to look for opportunities to go short versus going long. Okay, because now we are, again, like I said in the last video, we are now in current time breaking structure lower. So I'm want to look for supply setups. But right here, this was a valid demand setup. Okay, and this was a pullback to a key area where there was a high probability zone of demand, aggressive buying. There's a gap. Okay, this zone has not been tested yet. So the question is, what do I do from this point here if I'm interested in the market taps this zone? Okay, now you can use, say, for example, if you're looking for some means of confluence as well, if we are pushing higher, the market is breaking structure, you could possibly use the VWAP, the volume weighted average price indicator, say, for example, or any means of other tool at your disposal, and you can look to use it as a means of confluence to aid you in your trade. In this case here, if we're pushing higher and the VWAP is below us, when we pull back to a key area of demand, then this could be a valid or a good opportunity to take a long entry. Again, this is strictly off the 120 range chart. The market pulls back to this key area of demand. Now, in this case here, when it comes to trading directly off of a higher base chart, I'm not looking for the actual break and close of the candle. I'm just looking for the break. That's all I'm looking for. Because if I wait for a break and close of a candle, then the market may have already pushed from, say, 20,355 all the way up to here to 20,410, and then we may get a lot of drawdown or pullback here. So I'm just looking for the first bullish candle that taps, or it could be, it could actually be a bearish candle, whatever the case is. But in this case here, we got the first tap to the zone here. Then we got a candle that closes to the upside. And then I'm looking for the next candle, which is this one right here, to start to break above that candle to go long. The moment the candle closes and I get a signal where we're getting a start to break the previous candle here. So market taps the zone, pushes up, it closes here. The very next candle that forms, which is the bullish candle here, the moment it starts to slightly break above this candle here, then I'm going long. Again, I'm not waiting for the full on break and close, because if I do, then more than likely there's a possibility you can incur some drawdown, okay? And still you can incur some drawdown probably even when after waiting for the break here, is what I'm trying to tell you. This is why I was saying that the market you could get the candle close here to the upside, bullish signal, okay, off the rejection of the demand zone here, and then the break of this candle here, the market can start to pull back. You have to understand, again, the top end of this candle right here with that bullish candle there is 385. The bottom end where that wick is at, that's say 356. That's pretty much like 30 points right there, okay? If you're trading with a smaller account, please do not trade, especially the full-on E-minis, because you will blow your account if you don't know what you're doing. If you are possibly want to tackle this, then I would definitely trade using the micros, okay? That way you're not taking on as much, I say, drawdown, okay? Because the micros is 10 times less the size, okay, by tick value than the full-on E-minis. So be very careful when doing this, because if you're looking for, say, for example, a beautiful area of demand, and you're taking the break of the candle, then you can take it right here. All right. And the next question is, where do you place your stop at? My stop is going to go below here at 20,355. Okay. All right. So in this case here, there's a couple things you can do. All right. You can aim for gaps to be filled above. You can aim for a supply area resting above, or you can simply just try to trade for, a 1-to-1 or 1-to-2 risk to reward ratio. I typically like to do the 1-to-1. Starting off with, and then once the market hits there, you can take off most of your contracts if you're trading multiples, and then allowing the last contract to run. So in this case here, the risk to reward will be, say, pull back here, okay? We get a tap into the zone, we get the candle, the first bullish candle that closes, and then you get the break, the slight break of that candle that I'm gonna go long. So I'm gonna put my break even and what I'm going to get into the trade at right here. Stop loss goes on the back end. I'm using the risk reward tool. And then this right here is a 1-to-2 that you can aim for. But again, I'm first going to start off by going for a 1-to-1. So I'll put that at 1. And my first area top profit right here, the 1-to-1, says 20,004. What is it? 414 right here. Okay. So that's the first 1-to-1. I'll blow this up a little bit. Okay. Then you can take most of your contracts there, or take all of them off if you want to, and then just allow the maybe a remaining contract to maximize so you can capitalize on an additional run to the upside. And maybe if you can get a 1-to-2, close that one out. All right. But still, from here to here, right there on that 1-to-1, that's 30 points right there. Okay. All right. From 20,385 to 20,400, then that's going to give you 15 plus another almost 15 points there. So that's going to give you 15 points on 30 points in turn round is going to give you basically taking out at 20,415. So you're going to get 30 points right there on that move off that 1-to-1 on this type of setup right here. Again, I do not recommend this if you have a small account, because you could run the possibility and risk of blowing your account multiple times if you keep doing this this way. Smaller accounts, I like to, for those, wait it out. Look for a really good confirmation to where the market taps the higher base zone, and then you can kind of refine it by moving down, scaling down to a lower base zone and finding that zone within the zone. This does work, but again, you want to be taking setups like this with the direction of the market on a pullback to continue going along. So you're taking a continuation trade going along at a key area of demand, okay? Now, we'll take a look at here at a supply setup. In this case here, if the market is breaking structure higher and then we get push down, pull back, break structure, push down. We're looking for, and after we get a structure break to the downside, okay, we're looking for the first key area where there's a untapped, unmitigated supply zone. Push down, pull back, break structure. Right here, there's a gap resting right here. The zone has not been tested back at this area here. So because of that, I'm interested. Another key thing too, remember what I said about the VWAP? We're under the VWAP when we broke this area structure right here lower. When it pulls back to the key area of supply right here, then all I'm doing from that point there is looking for, we get this candle that taps it, this bearish candle that closes, and then the next candle that starts to close right below it or closes to the downside or starts to move lower, which is this bullish candle. So, but this is where I talk about the drawdown right here. Pay close attention. The market comes back up here. It pushes, it slightly breaks below here at 20,398. And then it comes down here at 379. You can close your position there if you want to, but then it pulls back. Okay, again, the stop is going to go on the top end right here at 427. So you're getting in here at 398 and the stop is going back here at 427. That's a big stop area. Okay, again, it's 30 points. This is not for someone, again, that is trading with a small account. You have to understand there's a lot of movement that can take place and a lot of drawdown that can take place in this type of a trade right here. Now, does it work out? Of course, yeah, it works out beautiful. We are under the VWAP, beautiful area of supply, untapped, unmitigated zone there. So we're going to place our, again, let's see, risk to reward. I'm going for entry right here at 398. Stop goes on the back here at, what is that? 28. Okay. And then this is a 1 or 2 right here, which it goes down there and it definitely hits it right there. But what I'm trying to get you to see is that if you go for a 1-to-1 starting off with, then you go from 397 to 367. You pick up 30 points right there on this trade. This is off a higher base chart. And we're under the VWAP again. Take most of your trade off right there or contracts off. And then maybe leave a runner with one contract and see where it goes. Once again, this is, a strategy which I'm explaining to you. It is not the same strategy in terms of or means of scaling down, meaning marking the higher base chart zone and then scaling down to a redefined zone within the larger zone. We're not doing that in this case here. We're taking, say for example, a setup directly off the higher base chart, but we're definitely looking for and paying close attention to structure. Structure is everything. We're breaking structure lower. So if I'm breaking structure lower, and if here's another means of confirmation, the VWAP is above us, we got a beautiful area of supply above us, then we're getting multiple means of confirmation. Structure break to the downside, under the VWAP, unmitigated or a gap zone right there, untested zone. You can set it up this way, break even, pretty much entry point 398, and then the stop resting above. So hopefully that makes sense. We can look at another example. Right here, right below it, it happened again. Market broke lower, pull back, broke structure, pull back, boom, right here. Unmitigated small gap right here, okay? And that's why I have it's a markup right here. The market taps it right there. Again, the entry point for using, I would use the risk to reward tool in this case here, or at least to try to, once I'm into the trade, to fill some gaps back down below or possibly down to an area of demand. So we get in, first tap is right here. The market comes here and breaks. As you see right here, what happens? The moment that candle closes to the downside, that bearish candle, you get into the trade. So you get into the trade right here at 359, or what is that? Yeah, 359 area right there, and it comes down to about 351. So you're getting like 8 points before it pulls back strongly. So from 359 back up here to basically 389, that is a 30-point candle right there. 30 points within that one candle. It never comes back here and stops you out. But again, you're going to have the capital to be able to weather a storm like this. If you're going for a 1 to 2, then your take profit is going to be here at 298, which it almost comes down there. And this is the reason why I say at least try to pick up your 1-to-1 to start with. So 359 359 down to 320, 328 area right there. That's going to be 30 points right there if you can, weather this bit of storm, because the market 359 and it comes all the way back up here to 384, 5 points, getting close to the area where your stop is resting at. So that's why, I don't recommend this type of technique for anyone that actually has a small funded or a small amount of capital to be able to trade with. Micros, is a good way to maybe tackle this in a sense, because you're not leveraging as much money into the market. And, if you get stopped, it's not a lot of money that you actually lost. But if you win, you still made some money. Okay. So, the risk there is that you can trade in the micros is that you're going to, take a small loss if you're trading the micros, and you're going to take a small win too. But the thing about it is that, trading the micros works more so in your favor, because the fact is that, again, you're not having to leverage as much, but you can still aim for high probability setups like this to win. It's all about building that account size up. Okay. So I wanted to show this because people always ask me if, about trading directly from the higher base charts. You still want to have means of confluence and trading with the direction of the market purely based on the structure of the market. Hopefully that makes sense. Again, that's all I have today, guys. I just want to show that. But, for all those that are really looking for more of a safety net and they want to wait for the a zone within a zone for more confluence, lately those type setups have been, say, hit or miss. The market may tap the higher base zone, say for example, like right here, and there may not be or may not tap a lower base zone within the higher base zone, and it just takes off. That's been going on. We don't control the market, so sometimes you may have to pull another strategy out the box or try to trade something else. In these market conditions, whatever the case is. And it's not a matter that the strategy doesn't work. The strategy, which I've been talking about time and time again, about trading higher base and then moving down or scaling down to the lower base charts and finding the setup, which is all part of the strategy that I break down, on the trade breakdowns. And again, if you're not an elite member, and you don't grasp 100% what I'm talking about, you may want to become an elite member. The link is down in the description portion of the video. It's very, it's only $6.99 a month. That's all it is. But you get the full on rundown. You get the full trade breakdowns. And actually today I'm going to be going through a trade breakdown on a setup that I took on a Dow setup, or the YM setup that I took going actually long. It tapped a beautiful area of demand, and I actually went long. Okay, so I'm going to cover that trade breakdown in full using the same strategy where we mark up a higher base zone and look for a scale down on a lower base zone to look for our entry point. So if you want to receive those type of setups and that type of information to where I go in depth about the trade setups, the ones that I post over on our Discord community, please do yourself the biggest favor. All you got to do is scroll down to the latter part of the video into the description portion. You'll see the first link is the Discord link. The second link is it says become an elite member. Once you click on that link to become an elite member, 2 tiers will pop up. You see one for $4.99, the other one for $6.99. The $6.99 tier is the one where you get all the trade breakdowns that I've ever posted, to where I go into detail, and it is a boatload of them, and they have helped out tremendously for lots of individuals based on the feedback I've been receiving. But that's where I go into detail about these setups. Okay, all right. And a strategy, I break it down. All right, I'll let you know what I was thinking, why I took the trade, what was structure looking like, where I placed my profit target at, where I'm looking to place my stop at in case the market comes back against me. All these good things. Okay. Also, you received the great video that I covered on market structure. Okay, so market structure 101 video, as well as the video playlist. So anyone that's interested, the link is down in the description. Outside of that, guys, if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button down below. Make sure to turn your post notifications on so you do not miss one of the uploads. And last but not least, if you found value in the content in which I've covered today in this video, please do the biggest favor and click that like button. Stop right now. Go ahead and click on it at this moment. I appreciate it. I'll see everyone in the next video. For all the Discord members, I appreciate you guys participating, engaging in the community, and anyone that's interested in joining the Discord, the link is down below. Take care and see everyone in the next one.